Should you offer a guarantee in business? Hey, I'm Tim Diesel. I'm a commercial real estate consultant. Today we're going to talk about different types of guarantees that you can use in your business to incorporate a lot of things. So let's start off by how I even got to this discussion. So I've had a few questions from several of you, and you're having a hard time picking up some investors, right? Now investors are getting a little bit more concerned. The market is shifting just a slight bit, and investors are going to get a little nervous. And that happens. That's just the way it is. And a lot of that money is going to get washed out as some of these investments flip over. And you'll probably see it. You'll notice it right around this time in the market cycle. A lot of the refinancing boom has died. It's over, right? Lenders that were doing a lot of refinancing, that's already done. So that's a little bit gone there. Now, let's get back to what I mean by guarantee. If you were to buy a product and that product wasn't satisfactory, you could always return it and get your money back. That's why a lot of people shop on Amazon, right? You buy something, you're not happy with it, you can always return it. So you have a guarantee of some sort, whether it's 14 days, 30 days, whatever. Now, think of that concept and try to bring it into your business. When you're talking to an investor, it's very difficult to say, hey, lend me $100,000, I'll guarantee it, right? Most of the time, maybe you don't have that money. Maybe you don't have any way to secure collateral for that investor. So what types of guarantees can you put in place? And that's usually, that's the part where a lot of investors feel a little insecure because they want to get in this investment with you, but it could be 100 or 200 grand or whatever it is, whatever the number is, and they don't feel warm and fuzzy inside, like you're really gonna deliver it. And they'll start making up scenarios. You'll notice this, they'll start asking you, well, what if this happens? What if we can't find a renter? What if it stays vacant? What if? And that's fine, right? You wanna be able to answer those questions. And that's a very common thing. The type of mentality that I want you to approach this with, or that I feel that would be advantageous to you, is what types of ways can you offer a guarantee to that investor? Now, there's a couple ways to do this. So if you have some real estate already, if you have some investments, and if you feel really confident, if you don't feel very confident about the investment, don't do it. Now, I'm gonna stop right here and say, if you were to invest with some of these big boys, there is no guarantee. You're basically a big boy, and if you lose your money, you're out, you're done. Why am I even presenting this to you? I want to give you a lot of creative ways of getting that money because you're gonna need to figure out how to work with investors. You should be lining up a lot of private money right now. And how are you going to do that? So it's having a tough time finding a deal, but when you do find a deal, now you don't have the money to find it. So let's try to tackle this problem here. And getting back to this, if you're the investor with maybe several houses or whatever, if you have something, maybe you can secure their investment with some collateral. Maybe you can't, right? So if number one, let's say you can do it, you want to give them some kind of security. But let's say you can't. Let's say you're brand new and you have no way of paying these guys back if the deal goes sour. Well, unfortunately, the way to really get them involved or just kind of tied in is what I had to do in the beginning is I had to give them a large equity share into the project. So let's just say it's $1 million property. Doesn't matter what kind of property it is. And I would say, look, you're only bringing me 100 grand, right? So I'm bringing 10% down, and none of this is my money because I'm new. I didn't know what I was doing, and I need someone to help me. Well, it's not fair to not give them most of the share of the lion's share of the deal. So I would give them anywhere from 50 to up to 80, 90% because I just wanted to get the deal done. Because I knew if I got the deal done, I would keep some relationships, some contacts, and they would be secured by it. Now, let's be very clear. I did not give them 90% of the deal. I would secure their money into the property, right? So they would have ownership of 80, 90%, whatever it is, until I paid them back. Once I paid them back, they are removed. Just like a bank, just like title on a car, just like anything. So it's very important you do that. And I'll tell you why. If somebody gives you 10% of the deal and you do interest only, well, until you refinance or sell or something, it's pretty hard to pay them back unless you're giving them payments or something. Once you do that, there has to be some kind of clause or some kind of agreement between you two. Hey, listen, I paid you back your money. You are a debt partner and now you're done. You're a debt investor. You're not an equity investor. The reason why I don't like equity investors is you give up a lot of the deal. Initially, I bring them on as equity partners, equity investors, if you will, until I've paid them off. So if it's been 3 years, I haven't paid these guys off and I've got to fire sell this thing, at least they know, they feel comfortable. Hey, listen, you're going to get some of your money back. So that's a way to think about it. Hey, look, I can't guarantee your investment, but I'll do everything I can to secure it. So that's much easier, I have found. And maybe you can, another tactic I've done is giving them whatever I could out of the cash flow until they were paid off. So if the amortized payments, whatever it is $1,000 a month, and I was making $4,000 or $5,000 a month, I would give them anything above, or whatever I earned was net profit until they were paid off in full. And a lot of times they'd say yes, or they'd say okay for the first year, or whatever the case is. So you have to be creative with these deals. Do not downplay an investor at this point. You really need to have some of that money. You got to have some of that liquidity in order to get some of these deals that are going to be coming up. So I hope that was helpful. If you have any questions, please let me know. Thank you.